Just testing the microphone. Just testing the microphone. Dead on. Hey, Damien. This is my first ever live stream, so if something goes wrong technically, sorry in advance. Just getting the grips of how to integrate everything to YouTube and things. But I think it's all working. So I've got different screens here. NQ, ES, that should change. I've got NQ 5 minute, and then I've got my 1 minute for each as well. So you should be able to see all of that when I change. Cool. Is there anything that would be helpful for me to clarify before we sort of start looking at trades and things? New York kicks off here. It's about 20 minutes until open. So typically will die off a little bit leading into it. So there's no real kind of setups here available. Something might happen quickly, but more than likely it'll be waiting until then, until I can get a trade. But if there's anything you want me to go over, I can do that. Yeah, no worries. So my system, I've sort of like, I suppose 9 different pillars, if you want to call it, I look at. The first one and the easiest thing that you should always do every time you log in then is look at your higher time frame bias. So what is the higher time frame telling you on each asset? So I'll do this for ES, so the S&P 500, and NQ, the Nasdaq 100. So I can give you an example. I wake up this morning, we're currently on NQ here, so I'll switch over to my higher time frame. I can just take off all the indicators and just look at naked price action only. So the first thing I want to establish is, are we in a trend, like an upward trend, a downward trend, or is price sort of ranging? So larger time frame, you can see we're in a clear uptrend here. So we're creating higher highs, higher lows, higher high, higher low, higher high, higher low. That's just the definition of an uptrend. You can see from here we're in a bit of a downtrend. So we've got our high, we've got our low, we've got our lower high, lower low, lower high, lower low. So you can even just sort of mark these out with trend lines in the beginning. When I click that, it adds all my indicators, so that's really confusing. But you can see downward channel, essentially downtrend, and then that gets a reversal into an uptrend. So this was the low. Was it when the straight got opened, like not that long ago, and prices just ripped all the way through the highs, like so quickly. So it's all a bit crazy at the minute with the war and stuff, so you just have no idea what's going to happen, which is why I'm sticking to more like micro time frame scalps. So I can't really give you a direction for the market today. We're sort of coming to, there's a bit of volatility coming in. Hang on. So you can see, look on the 1 minute there, that wick is just wick down right through VWAP, taking out all these internals. So I'm just gonna have a look at this here. See what's going on. So there's a 30-minute back in the daily point of control. Back tested that previous period's wick. We've got some buyers coming in straight off that. So it happens far too quickly to get in a position. But we'll just kind of keep an eye on this here and see if anything presents itself. But yeah. So I'm looking at higher time frame. There's Johnny in as well. Hey Johnny. Higher time frame. So this morning then, I'm logging in. You can start monthly, weekly, daily if you want to. You can see here on the monthly, so the month of April, we've opened and just ripped through all of this price action. So this is incredibly bullish. So we are just going with what the technicals are telling us, and we're going with upside momentum. On the weekly, it's the same thing. So you can see 1, 2, 3, 4 weeks in a row. This is what we call one-time framing. So with the candle then, you've got the candle body. It's green, so it means it closes above its open. We've got the open, which is the low of the candle body. You've got the wick low. So the candle opened here on Monday, 30th of March. We had a price moving down to the low of the wick, reclaimed its open, and then pushed to the upside. We came to the upside of this wick. That's the high of the day. And then we closed at the top of the candle body. So you can quickly just look at the candle, get a bit of a visual representation then of what has happened. So I look at this candle. I immediately know that we opened, we swept the previous day low, reclaimed the open and pushed to the upside. For me, this is bullish momentum. It's a finished auction to the downside. So that tells me that we've swept out liquidity. So anyone who's bought in this candle here will have set a stop loss below the low. So a stop loss is basically if you enter a position, you want to have a position set automatically that is going to liquidate your position if price goes against you. So if I don't want to just randomly buy and then have no protection for my position, if price goes against me and keeps going and going and going, it's going to liquidate my entire account. So I need to obviously have a level to protect it. So for example, if I entered a trade right now, I would need to have, with my system, what I call just an invalidation point. So if I predict the price is going to go from where it is here up to here, I need to have a point where if price moves against me, that I just want to be out of the trade. So the logical point on this, if I were to enter long now, would be below the recent low here, below this wick low. So I could simply enter, place my stop loss here in the hope that price goes this way to make my profits. If price comes down and into my stop loss, that will automatically trigger my liquidation. So if I'm in a buy position and my stop loss below the low gets triggered, that enters as an aggressive sell order because it's coming at the opposing side of my trade. So that liquidates me as an aggressive sell. Any aggressive sells that take place below this low, this is where it gets really kind of tricky and melts your brain. There's also passive orders resting in the order book, and they can absorb then the aggressive sells. You can't see the passive orders here. You can see it on like book maps and heat maps and things. But if a lot of stops get triggered and absorbed, price can then reverse in the other way. This is typically how large positions are filled. So like big institutions will often trigger stops to fill positions and then move in the opposing direction. What that looks like visually on the chart is essentially you get a big wick through a level and then it reverses and goes in the opposite direction. That's what we often refer to just as manipulation. So this day here, we get the open, push down, we trigger stops below this low, they all get absorbed, price reverses. This is a finished auction. Essentially, we get manipulation, we get the large positions filled, they're now ready to push price in the opposing direction, and you'll see that all the time in the markets. The biggest thing you need to learn from that is like the different types of orders and how they're triggered and sort of what it means when they're triggered. When you sort of grasp that concept, it'll really kind of enlighten you to what's happening in the charts, which will come to like different stages that I do with my analysis. I'll mark out levels where key liquidity should be resting, and these levels are often like magnets for price. Price will get pushed to these levels. Oh, sorry, I didn't change my screen there, did I? Sorry, Johnny. Yeah, so that concept, it's all taught in the classroom on the school, if you have a look at that. But then if you want any further like clarity on it, you can just give me a shout and I'll be happy to go through it with you. So this is the first thing I'm looking at. So wider time frame bias is to the upside. You look for key liquidity levels on all these higher time frames. So that's our weekly. We then go to the daily. You can see we're very, very bullish on the daily here as well. What I see on this daily is that we've opened. We're currently red, so it means we're trading below the open. We opened and price immediately came to the downside. In terms of like supply demand zones, this zone here is referred to as a supply zone. So anytime price came into it, it was sold off. It came into it, it was sold off. It came into it, it was sold off, and then it broke through. When this happens and price comes to revisit this area, this supply zone is now considered a demand zone. So price comes back into it. There's demand for the asset. People buy it, and then it continues to the upside. So you basically get, there's loads of ways of describing this: break, retest, supply, demand, support, resistance levels, all that stuff. And that's like the very, very basics of your analysis. When I look at the daily, what I see is we've opened, came down into this supply zone. You can see that we've wicked into it, and now we're pushing to the upside. If we reclaim the daily open up here, this indicates to me that this supply zone has now been flipped into a demand zone, and I can expect price to now continue to the upside. So this is what I'm seeing leading into New York here today. One other thing I do see is all of these wicks that we have to the downside on NQ. We have failed to come down and sweep these wicks. So this often looks like manipulation. So there's a lot of liquidity resting down below these lows. So New York could very easily come down and wick out all those lows and then go to the upside. So that's a key area I'm going to be watching for here today as well. So with the war going on and it's kind of rangy, very volatile, like that's not the cleanest day for me to look at and give you like a really strong higher time frame bias. So what I need to do then is just go down to the daily levels and look for little manipulation phases within all of this kind of lower time frame structure. So I go to my daily volume profile. Each profile you see here represents one full day of data. Just making sure everyone can see the screen. So the volume profile, it will show me the number of contracts exchanged at any particular price point, which is really important. The big one in the middle here, the thicker that this profile gets, it means there's more contracts exchanged. So you can see in here, the profile is very thin. So there's very little volume in this area around this price point. As we come up in here, you can see very, very thick, lots of contracts exchanged. And you can see prices kind of hovering around it. We break through, we back test it, we break through, we wick down to the value area low, and we just kind of range in and around this kind of center point. Loads of volumes are just being exchanged, or contracts being exchanged around this level. So this is what we refer to as the daily point of control. When we're above the daily point of control, we're thinking bullish because price is holding the level. If we come down through and we lose it, our bias switches slightly to more of a bearish bias. So I now look at the daily structure, volume profiles, and I'll just think, okay, what has happened today? What has price achieved? So we have our different exchanges as well. It sounds like a lot when you layer it all, but if you learn each individual concept, they're quite simple, and then piecing them all together, it just becomes like its own wee language, second nature. But what I'll do now is look at the different exchanges, and I have a template for this in the classroom in school as well. It's the TPO template. So this kind of purpley one is New York. So everything in this purple template represents New York price action. And then this lighter one is going to be overnight session, so Tokyo Exchange. Tokyo Exchange tends to be lower volume. You tend to see price kind of ranging a lot more. New York is where you're getting massive volume injections, and price tends to move a lot quicker. It's a lot more volatile. especially in the open of New York, you'll get loads of manipulation. So you'll get price spiking up, taking the highs, immediately reversing, taking the lows back inside. And it just essentially wrecks as many positions as possible. So you have to be really sort of careful with the New York Open. If there's nothing super clear going into the New York Open structurally for me, I just kind of sit and watch it and give it sort of 15 minutes, even half an hour, to see if it'll sort of settle down and establish a kind of clear trend or any kind of clear signals. Because in the beginning, you'll tend to get stopped out if you enter very, very quickly. Yep. No. Something else? Get on something. Want me to get you something else, buddy? Go get some crisps. My kid's crying because he wants a rich tea biscuit, but we don't have any. Buddy, want me to get you something nice now, okay? Okay. Right, it's fine, it's fine, it's fine. The joy of having kids. You're okay, Ethan. Do you want another treat instead? Daddy's doing his work. Right, I'll take you after, okay? No, right. Yeah. Why don't you go watch TV and Mummy will get you a treat and then Daddy will finish his work. Okay? Right, so yeah, looking at the exchanges then, this is yesterday's New York session. Obviously we haven't opened today's. So you can see we've just formed a little bit of a range here. Price action, it's you look to the lows, you see a lot of wicks. So it's like manipulating the lows. There's no kind of clear trend here, so I anticipate price today probably doing more of the same. Just being very choppy, taking out a lot of positions. I'm not a breakout trader, so if we push through the highs, I'm not going to jump in long because often we'll see that reversing. And same with the lows. If we break down the lows, I'm more likely to take a long because we're more likely to come back inside. Can I just do my work, buddy? Do you want to go watch TV? Okay. Oh man. All over a rich tea biscuit. Life's so simple for kids, like. Alright. Ethan, there's people watching, there's people watching through the camera. And they're watching you crying over a biscuit. So yeah, basically in a nutshell, what I anticipate today is a bit more ranging and price just being very tricky. It's a difficult time to be jumping in to learn trading with the war. So if you do get the grips with it now, once everything settles, you're going to be in a great position because price it's full of manipulation every day now. So yep, basically what I plan to do now in New York is just to kind of look to these micro time frames and look for little mini scalp trades. So in and out of positions really quickly. So it might be like a minute long, 30 seconds long. I'll not be holding anything for, 5, 10, 15 minutes or more. And this is my plan. Does anything I say make sense there, or is there anything you'd like clarity on? I know it's kind of go through that very quickly. So we're opening New York here in 50 seconds. Ethan, buddy, can Daddy just do his work? Do you mind if I just do my work, buddy? You go watch your TV, go watch a movie, and then I'll take you after. Daddy needs to finish his work. Okay, there's no rich things left, okay?
I want to go to the shop.
Right, well, Daddy's doing his work, okay? I can't take you to the shop now.
I want to go to the shop.
Okay, Ethan, buddy, let Daddy work, okay? It's very, very important. yeah. All right. Sorry. So much drama. So yeah, in reference to about the wicks, there's New York Open. So we're probably going to see some wick theory stuff now. Basically, if price comes down below a low, anyone who's got a protection on their position, so notice we've just taken this low, anyone who's entered long in here has just been triggered to exit their position. They've lost money. Now you can see price coming back above again. So their stops were now absorbed. Price is now pushing back, attempting to push back inside. So this is what we would call a swing failure pattern or a liquidity grab. And I'm looking at both assets here at the same time. So ES, you can see, is holding the level and NQ has swept the low. So this is a bullish indicator. We call this SMT. So NQ, top 100 tech stocks, it's a lot more volatile than the S&P. So it tends to look for liquidity a lot more. So Ethan, buddy, right, you sit here beside me. That's it, right? And just you keep quiet, okay? So if it sweeps the low and ES holds, this is a bullish indicator. So I'm now looking to ES 30-minute. We're holding the daily point of control. We've back tested it here and we've held it. This is bullish. NQ, we've swept the internal low to the downside on the 30. So that's in their previous daytime value area high. But I need my two hands. And then I look to the micro time frames. So if we can hold this low in NQ, this will be a bullish signal. I would be taking this trade if we were, 30 minutes into the session. But because the session has only started, we're only 1 minute in, there's a stronger chance of this being a sort of fake out and price then coming to trap those early traders. Typically, at the beginning of a New York session, you're going to see early traders taken out of their positions. Because people will always panic and jump in, and like retail traders are driven by emotions. If price moves in a particular direction very quickly, they often try to go with it. Panic, hit the buy button, hit the sell button, and then price reverses and takes them out. So if you think of it just like a big game of chess, smart money we call it, basically institutions, people who have massive orders to fill, they are going to manipulate price in order to attract people into the market and then reverse it on them. So when you're looking at these levels and analyzing the charts, you want to try to think like smart money, essentially, not like driven by your emotions. So if something happens quickly, take your time, analyze it. What do we think's happening? What has price achieved earlier in the session? Do we expect it to continue? What are the conditions like? We also look at the, economic data. Is there any data coming out today? All that kind of stuff you're factoring in. So today, we have nothing important in terms of data that's going to cause any kind of spikes. Even tomorrow, nothing important. So we're factoring all of that in as well. So we're back now to just the 1 minute chart. You can see we had the swing failure. Watch out, bud. To the low. We've held that level. ES is continuing. Could you sit over here, please? Thank you, buddy. Sit here. That's it. So it said before, if price holds this low after sweeping this internal level, I'm interested in taking the long here. And what I'll do now is just wait and observe the 5 minute candle here. So this is NQ 5 minute chart. I'll be looking at the 1 minute for my entries, and then the 5 minutes I often look to for a bit of direction on the trend. So I want to see this 5 minute holding these levels. We've got 50 seconds remaining in this 5 minute candle. This dotted line that we're seeing here, it's called a VWAP. It's a volume weighted average price. So it's basically draws the average price for the day beginning this morning. And all those levels are important. If the average VWAP is pointing up, it's going to mean we're in an uptrend. And you want to go with the trend. You don't want to fight it. So it's the saying in trading, the trend is your friend. So you're going to layer all these little things on top of each other to come up with a theory for taking the trade, basically. You can see on the 1 minute... Sorry, my throat's away. We're still fighting around this level. but NQ is holding price above the daily point of control, which is this green line. So the highest value node, or the price in the day that has had the most amount of contracts exchanged, we're holding this price above that level, and this is bullish. So you can see we're breaking out now. So what I'm going to do in this 1 minute is just mark a little blue box here. This is a supply zone, so anytime price was pushed into it, it was sold off. We're pushing above it now. ES is holding as well. So when this 1 minute candle closes above NY open, this is a bullish signal, and I can then look at entering on a back test of this supply zone. So what I'll do, I need to wait for the close first of all. We've got 5 seconds. We're pushing well. So I set a buy limit. If we come back inside and tap into that, we've just front run it slightly. That's really annoying. We front run it by about a point there. That's us back inside. So if we can start to push through, looking quite nice. I'll take an aggressive long there, and that's us up 180, 200. So I could just come out aggressively as that's my first trade. So that was a supply demand flip on the 1 minute, and that came out at 123. I could hold that and be a bit more aggressive and run with it. But because price is pushed above these local highs for the first time, it might want to come back inside again. And because it's the first trade within New York session, you sort of want to get in and out quite quickly and take your profits. And just lock a few easy trades in and get a bit of a buffer. Psychologically, if you lose your first trade on the open, well, I find with me anyway, that I struggle sometimes to recover because your emotions start to kick in. So in and out for a quick profit. Another reason why I came out there very quickly was you can see previous day point of control on ES as well. So if I move to my ES 30-minute chart, these daily volume profiles, this is yesterday's point of control. The highest value node yesterday, where the largest amount of contracts were exchanged. Price pushed into that on the 1 minute. And this is why I'm watching both assets at the same time. The one on the left here, this is ES, S&P 500. The one on the right is the NQ. And you're always watching both levels at the same time because they're very highly correlated. You can see they're both moving together. If you get little kind of deviations between the two, that can often be like a signal. So you're watching all this at the same time, and you can see that trade I took was only I don't know, 10 seconds, 15 seconds. So I don't need to be telling you where price is going to finish today or tomorrow. All I need to do is get a little bit of a bias in my head and then just work off these micro time frames, especially in these conditions that we have with, it's very volatile with the war and things. So there's we're pushing through above those highs. We came for another back test. NY opens held. And we're coming above previous day point of control now on ES. So this green line we have on the left, we're reclaiming that level. This is bullish. And now we're heading up to the daily open. If we reclaim the daily open and hold it, then we're back to our theory we discussed earlier. If I go to the daily time frame, if we reclaim this, we can sort and hold it. We can anticipate price continuing. Very large downside wick on the daily here. So a lot of buyers interested when price came down this morning. NQ daily you can see as well. So we'd spoken about this supply demand flip before NY open. We came in to back test the supply zone, flip to demand, and we're being bought up. So that's fitting into our kind of general theory before NY opened. And you can see we've had the open, push, take the internal liquidity, reclaim VWAP, and we're now trying to push to the upside. So That's a really good 5-minute close. This is our 5-minute chart. We have back tested, back through NY VWAP, daily VWAP, these averages basically, this blue line. NY VWAP is our NY sessions average. It's pointing up, we've reclaimed it and we're pushing. So this is bullish. Okay, buddy, hang on. Just let Daddy speak for now. Do you want to just jump off my knee there a wee second, buddy? Yeah, you go and watch your cartoons. So price is bullish. It's trying to break out. I typically don't take breakout trades. Although it's looking, it's looking good to the upside. One of the reasons why I'm just not keen really to long out of here, if you look to the previous hour, we have a large upside wick, which means there's lots of sellers present in this wick. They're all going to start to fight now to keep price down. So you might get a lot of selling coming in until we get above this wick and invalidate those sellers. You could see a little bit of a back and forth. But yeah, it's looking quite good.
It's quite good to focus.
Yep.
Yeah, because
On the 4-hour then, NQ, we're starting to engulf all of this previous price action. So from this morning, we open 11 p.m. We've been red on the 4-hour all the way down. The 4-hour from 11 then is starting to engulf all of this price action. So this is bullish. All the sellers that came in all day long are now just being wrecked, basically. So we want to now try to go with momentum if we can find an entry. But like I said earlier, we can't just emotionally jump in. And we don't want to have fear of missing out. That's the biggest reason you'll get wrecked in trading. Is the FOMO.
For effort. Effort. Jane.
So watch out your hands there, buddy. So we're coming up to 2:45. Ethan, buddy, just take your hands off. Thank you. Well, another thing that we're going to do typically is look to the opening range. So the first 15 minutes of NY we'll call the opening range. So this is now the 15-minute chart. Every candle represents 15 minutes of data. Ethan, Daddy can't see with your hands there, but so you can see we've had NY open, prices forced down, taking the lows. Buddy, if you do that again, I'll have to put you away, okay? Do you want to go to your room? Well, please don't do that, okay? You can sit there, but just don't do that. All right. Price opened. It was forced down to take the lows. The stops were triggered and price reversed. So this is a very clear swing failure. Large positions have absorbed all of this and price is coming above. This is our opening range. It's about to be set. You can see we've 1 minute left and it's bullish. So what I would like to see is price coming back for a little bit of a retest. And then to look for a long entry. Right, buddy, can I just focus and do my work? Would you go watch TV, please? And then I'll take you out after, but I'll not take you out if you're going to jump all over me, okay?
I want to
Go watch a movie, buddy, and then I'll take you. But if you're going to cry and jump and get on with that, I'll not take you. So we're about to close opening range here. Oh boy. Do you have kids, Demo? Oh, look at that wick. Good grief. So you can see immediately on closing the opening range, prices just wicked right into VWAP and been bought up again. So it's looking quite bullish. The risk there for me is quite high. So my invalidation to enter is below the wick in the VWAP. If I enter with 10 contracts, that's risking $500. I don't really want to risk that amount. I'm still not grown up enough for kids. I can barely handle it, as you can see. It's just carnage. Every day is carnage, but it's great. So yeah, we're reclaiming this 5 minute, you can see. So this is bullish again. It's a massive risk. It happened so quickly. For me to enter there is going to cost me a lot if it reverses. What I can do is like drop this right down to 1 micro and see. It sort of goes against my system slightly that I'm trying to trade a breakout, but there's a pretty big delay here on my data feed anyway. But I'll enter this just for the crack because we're just more for education, I guess. So you can see we were talking about that opening range, and that was the 15 minute. This is the first 15 minutes here. As soon as that 15 minutes closed, we had a massive flush back inside. If I now move to the 1 minute, the flush came right back into NYVWAP. So this is the volume weighted average price from New York Open. This blue line is pointing up. The price is trying to move upwards. You can see we're getting a bit of a rejection off the daily open. So I might come back in for a loss. It was quite an aggressive trade. And again, that's why I don't typically trade breakouts. But if it does break out, I'll box it in and I'll show you how to kind of manage a position when you do that. So we had the big flush into NYVWAP, immediately bought back up again. And on the 5 minute, we have, again, taken the internal low. So any of the longs that had entered here leading in to the end of the opening range, they were immediately flushed out of their positions. This wick came back into this supply zone here. There, that's starting to break out now. So this blue box was supply, price came into it, it was sold off, came into it, sold off, pushed through, and then came back to back test it. You can see we wicked into it, pushed through, reclaimed the open, and it's attempting to break out now. We're at the daily open, so this is a key level for the day. This will determine the rest of the day and how we're going to perform. We're pushing through it now, this green line. We're pushing through it quite well. And that's up like another $50. I'll maybe just I'm tempted just to come out of that. We'll see how this 1 minute closes here. This is key. So I can now drag my stop to break even. So I can't lose money in this trade. The worst that can happen is I make $4.50. So my stop is now here. If price comes into it, it liquidates me, or it sells my buy basically, and I'm in a slight profit. This 1 minute's going to determine what I want to do. If we lose the low in this 1 minute, I want to be out of the position. So it's now $18. We're going to lose it here. This 1 minute, that's a nice 1 minute swing high. We push above and we close red. This means sellers are present and they're attempting to push price down. This is very highly likely to stop me out here for $18. So I'll just manually exit. We're back to daily open here again, and you can see we're now below it. So this area, it's key. That's why you're getting selling coming in. All the sellers that we were talking about up in this wick, they're now fighting just to push price down. And you can see we've taken the high now on ES. So any sellers that were in this wick, price is pushed above, which is going to be their logical stop loss, and triggered their order as a market buy. You will have passive sellers waiting in the ask profile, absorbing their market buys, and then price comes back in again. So it's attempting to do a swing failure pattern in the opposing direction. I've just accidentally deleted one of my charts. Let's see, just fix that really quickly. So yeah, it's a constant just back and forth basically. I'll worry about that after. So you can see we're still fighting around this daily open. There's a massive flush again. So a lot of sellers back into VWAP. I mean, because we've taken the high, I'm less inclined to buy this. So let me explain that. If we go to NQ, I'm now watching various charts at the same time, and this is my TPO profile. These highs for me, they were all equal, which means there's no finished auction to the upside. My template will automatically draw a blue line across this. So you can very quickly just get a visual representation of where what we call a per high is. These highs haven't been finished, which means I want to see price wick through, take the liquidity, and then come back inside again. So this was a magnet for price, and you can see we just wicked through it, more or less to the tick, just came above slightly and back inside again. So this now starts to look like a finished auction to the upside for me. So like what I can even do is just throw a tick there and say, all right, business is finished. This is why I'm less inclined to buy now. We could break through, and structure is up, so we are trending to the upside. So it's definitely possible, but it means it doesn't fill the criteria for me to take a long now because we've hit the target. And that's our first target. If we reclaim that, then our next target is going to be the next high above. But for now, then I just need to be patient. You can see buyers are coming in now again. So we are still trending up, and we're holding New York VWAP. So it is still bullish. If we can get back above the daily open then our target's going to be this one above, previous day high. And on the 5 minute here, you can see all wicks to the downside. So any attempt to push price down is being bought up again. So we are bullish. I'm going to give it a couple of minutes there. I'm just going to nip to the toilet. So yeah, currently sitting in nice profit for the day, 1250. So I don't need to like rush into any trades that aren't super clear. And you can see now, back to NQ 30-minute structure, we now have this large wick to the upside on this 30-minute period. So this is, it's our 15-minute period. So if I go back to that, there's a system called the opening range breakout trade that a lot of people trade. I personally don't. But this 15 minutes formed the first, what we call the opening range then. So this range is set. When price pushes above that range, it tends to attract a lot of retail buyers into the market. So people will start to just get emotional and buy. A lot of the time, you're going to find this opening range, when it breaks to the upside, it comes back in again and it just wipes out all those traders. And then you might then get the move afterwards. So that's why I'm always hesitant to buy like the first breakout in New York. More often than not, you would get wrecked if you do that. And you can see that's what's happening here today. Then price coming back in. So we're pushing back down towards NYVWAP again. And it's sort of starting to consolidate a little bit. So all these kind of 1 minute candles, they're all kind of bunched up, which makes it more difficult. It means price is very efficient. There's loads of buyers and sellers. You know, it's all going on very, very quickly. We want to look for like inefficiencies in the market and then exploit them. So because these markets they're absolutely massive, so they're really, really liquid. You've just like hundreds of trillions of dollars. If there's any kind of little inefficiency in the order book, so say a price spikes, so all these wicks that we saw, that wick down, that's an inefficiency. It moves so quickly that price will tend to come and, you know, retest them and find fair value. So this wick here, an example of that would be you get the push, but then price comes back down and it comes to fill the wick. So it came to the 50% of that wick and bounced off VWAP. It's always coming back and finding balance. Think of it like a pendulum. You might sort of deviate from the average and then you'll swing back into the average again. You'll maybe deviate to the downside and then you'll swing back up. And price just tends to do that because there are so many people in the markets. It's going to naturally do that. So unless you have like a really clear trending day where price is just ripping in one direction, like trying to buy breakouts to the upside or downside is just not a good idea. So it's really important to like establish the conditions that you're in before you start to trade the day. And every day is going to be different. But today it's kind of choppy. Bit of a range. And we're anticipating just loads of kind of fake outs and lots of people getting wrecked. So I hope something else comes up just to not waste your time. But we've got a couple of kind of trades. And then this 5 minute now is coming back into the supply zone. So this supply zone, we often look for first touch setups. So supply zone, supply, we break through. The first touch, when price comes back to it, acts as heavy support. Because we've come down now for the second time, this supply zone, it's no longer as interesting. Because I would just consider it washed, basically. We've already had our bounce off it. We've had the reaction. The next time we come down, less likely. So the more you sort of hit these levels, the weaker they're going to get. So I always look for first touch setups, basically. I want price to come down to hit a key level. I'm looking for the big reaction off the first touch of it. And that's why we got such a good reaction on this 5 minute candle. But you can see this one now, we're not getting much of a reaction here at all. In fact, we're now just kind of pushing below. We're coming back into the NY Open. So this is the point where New York opened. And this is also going to be a support zone when we come back into it. So you tend to get a little bounce off these zones. But again, because the context for me is really choppy, you look at these wicks. We've taken the highs back inside. Loads of wicks to the downside. Loads of wicks to the upside. Price is just wrecking all around it. It's a wrecking ball, basically. So I need something like super clear, basically, is what I'm saying, to really take anything. And what I'm doing as well is watching order flow. So I'll pop this up on here. So we're back to VWAP. Actually, that's not a bad zone. Let me just quickly look at this. We have trapped low shorts there at the low in the point of control. We'll see NQ here. If we get any kind of bounce, we'll see where this 1 minute closes. Because we've opened a new 30-minute period, and we can expect a little bit of a volume injection. But we're one-time framing on the 5 minute, so we're closing low, we're opening and immediately pushing. We're closing low, opening and immediately pushing. This is obviously very bearish. But if price is going to continue this theme of just like wrecking people, we should expect the bounce back in just to trap some positions. So what I look for if I want to see, this is inefficient here. So we're getting an imbalance to the downside. So it's a sell side imbalance or a buy side inefficiency. Buyers are inefficiently able to find fair value here. Basically, that's just a very wordy way of saying price is moving aggressively to the downside. And you can see there's no real green wicks here, just the one on the 1 minute, or green candles. So price typically will often come back up inside, find that balance, and then continue. And that's what we're looking for. So we're back into all of these wicks here on the 5. And now I'm observing the 1. So if we get a nice close on the 1, I would be interested in taking a long just to bring us back inside. It would be very quick scalp long. ES, we're putting in a nice swing low. We're closing above point of control there. So that is not a bad level. If we can get back above it. No. So no trade because we didn't get above this green line, our point of control on ES. That's what I was looking for. There we go. That's the push we're looking for now. But this wick is so big for me to set my invalidation point below is going to be very, very risky. That would be $700. Sometimes the move happens so quickly. I was going to set a buy limit there, but I didn't. But oh well. So yeah, this is the move back in that I'm referring to. That kind of little push to fill in efficiencies. So we're closing quite well on the 1. I'm going to set a buy limit on a VWAP backtest. If we push down first, trigger my, see, we just front run it again. I'll leave it there and see. But this is, it's changed context a little bit, but I'm just, I shouldn't. Because we've taken the high first, the context changes. I want to see the 1 minute open and backtest and then push because we have a wick high on the 1. If we come back again, it changes the context for me, but we're pushing through there now. But that would have been the trade if I'd have just left my buy limit in there. That would have been another 400 locked. But what I was looking for, so this inefficiency to the downside, we get the low swept, and then we close above our key level, which is the daily VWAP, and then this green line, the daily point of control. You can see we close the 1 minute above, we open the consecutive 1, and then we get the wick into it to backtest it, and then we push. So that's why I have my limit order set, which is basically just an automatic order, and I front run it there by like 1 tick. But that was the trade anyway, if I'd have taken it. Should have taken it, but oh well. So yeah, one other thing then, what I'm watching here when this is all happening is my delta clusters as well. So you can see them here. which is gonna also look a little bit strange for the first time. But I can see the bid and the ask profile on both assets. NQ on the right, ES on the left, and okay, Demo, no worries if you got to head on. If you have any questions, shoot me a message in school, sure, and I'll be happy to get back to you, or I'll be happy to do some more live sessions as well. But hope that made sense. No bother, anytime, just give me a shout. I'm really happy to do it. Gives me something to do. So yeah, I'm going to cut the stream short then. I'll cut it here, and I'm also going to post it, save it and post it into the school group. I'm going to have to take him to the shop here and get him a packet to keep him quiet. But dead on, I'll chat to you again soon, Demo. Johnny, I'm going to end the stream here as well. And fire into the school. So I'll chat to you later.